Hello, I'm Jay Bowman, Managing Director of Research and Analytics at FMI, and welcome to this, our second quarter forecast of construction spending for Canada in 2019. Here at the end of the second quarter of 2019, we're still forecasting a 3% increase in total construction spending for 2019 compared to 2018. Now, this is roughly a rate of inflation increase and slightly less than what we saw in 2018, which grew by 4% compared to 17. But the reason why we're not seeing a more negative downturn is really the juxtaposition, if you will, of different sort of economic influences on the national economy. On the positive side, we continue to see household spending at high levels. Job growth continues. There's more investment from business perspective in equipment and machinery, and the U.S. has removed the tariff on aluminum and steel. There are some factors that are limiting that growth, and most of those revolve around exports decreasing, the lower price of oil, and continued uncertainty around trade. As we turn our attention to the various sectors of residential, non-residential buildings, and non-building, we continue to see that growth in that roughly 2 to 3% rate over the next 5 years. There are some questions around the residential side, though, however, near term, with some of the decline in starts expected over the next 12 months. Similarly, on the commercial side and non-residential building construction, we've seen some of the major projects come to an end. But on the non-building side, this year should actually be fairly large because of the number of mega projects that are being brought to market in both the power and the water wastewater markets. One of the things that we believe you should start paying attention to is the change in composition of spending. And I typically look at that as replacement and displacement. You can think of replacement as the change in construction. So for example, take data centers. What we're seeing in the change or the replacement in data centers is more of the hyperscale, the million square foot plus data centers compared to the co-location or smaller enterprise. From a displacement perspective, we see this primarily in the retail sector, where the rise of e-commerce has led to more investment in distribution centers and less in the traditional brick and mortar retail. I'd like to thank you again for your interest in this, our second quarter forecast for 2019. As such, I'd suggest you contact one of our investment bankers or consultants to talk about the success for your own company. You can download a full copy of our report also at our website at www.fminet.com.